Well, let's take that IT discussion forward then. Prakash Diwan is with us. Prakash, I want to ask you about Tech Mahindra. That's the one that had some valuation support. Year to date, that's been a relative underperformer. It's down closer to around 37% or thereabouts. But in this month itself, it's been a relative outperformer because it's up closer to around 5% in comparison to what the IT index has done. And my director will pull up both those two charts. What do you do with the stock at around this 1,100 odd mark?
Good afternoon, Nigel. So, I think while it lost a lot of ground, at the time we saw a big sell-off within IT and an entire reset on the valuations. In fact, it lost about 52%, if I remember correctly. And then it's kind of recovered for the simple reason that, the average P multiple, the median P multiple for, let's say, the last 5 years at which it has traded, it's now kind of, close to that, if not lower, which means that at least you're not kind of, overpaying from a historic perspective in terms of, what the company always has attracted as premium valuations or valuations thereof. And interestingly, the rollout on the 5G has probably been much sooner than anticipated. So my sense is that their expertise, their lower dependence on verticals that are probably languishing or experiencing more slowdown is helping them. The product mix is far more superior. And remember, that's the only company in the last 6 months that has actually been on a hiring spree in terms of freshers. And the bench strength is fairly strong as compared to some of the other ones which had to probably pay much higher wages to kind of, make sure that they were manned correctly or adequately. So that's kind of working or started to work for them. The question is whether you buy it at this level. My sense is if you have a long-term view of 3 years plus kind of this thing, you definitely could, because even with the volatility, you'll probably even out in terms of your gains, and it will give you market superior gains from here on, even at this 1100 plus zone. But yes, of course, you had far better opportunities, but at that point in time, the sector itself was probably not very attractive. So, that's where the reaction is.
So over 3 years, you're saying the sector looks attractive, Prakash. But what about over the near term? Say, FY23, the next couple of quarters. If the world slows down, as is being predictive, things can get challenging for IT. And we already have signs that deal wins have come down on a quarter-on-quarter basis. So if you have a 1-year time horizon, what's the advice?
Good afternoon, Rima. I didn't know you were on the panel as well. Having an IT special expert is always a challenge, talking specifically about the near term, because yes, there are likely to be far more wage pressures, far more cost increases as compared to what we've seen, on a YOY basis. If you see, with travel coming back, and a lot of the clients would probably, this whole offshoring, onshoring mix also is kind of, I'm seeing going through a significant change, which keeps on increasing costs for some of these companies. But then you'll have to start being selective. I mean, you'll have to look at companies which have an expertise on certain areas which are critical enough for clients not to kind of discontinue or slow down spends on. And that's precisely the hope. But the US and Europe economies are very clearly giving you that sign that there could probably be some sort of a tough time, but it might not be a hard landing for IT businesses as a whole because of the continuity. So anybody who is into verticals related to travel, related to oil and gas, will probably continue to see some benefits, but maybe BFSI takes a little bit of a backseat, maybe healthcare takes a backseat. So you'll have to start sifting through on those angles. From that perspective, question is, what do you look at buying? If you look at some of the smaller companies within Indian IT itself in the near term, there could be some sort of a comeback of sorts, So that's what I'm anticipating. But it's always the first large ones that will probably participate. So you've seen Infi, and Anuj and I spoke about it a couple of days back, given the fact that there was this buyback effective date of sorts that kind of makes it possible, or a possibility potentially. So those things will come in the way. But you buy IT on dips and be in an accumulation mode, Rima. That's the whole idea. You don't kind of start harvesting so soon. There's nothing to harvest. But this year is going to be a time to accumulate longer term stocks, if you like, that sector. And then, of course, right through the slowdown or the volatility that will get manifested because of this slowdown that's anticipated in pockets.
Okay.